Alrighty. Let me get this invite out to everybody here in the chat. There we go. Let's get on it. All right. Let's get on this here. Day number 12. Day number 12, guys. Day number 12. And I missed out on, a few trades. Missed out on a few trades. One yesterday because of, or the couple of days ago because of user error on the Topstep platform, and that's okay. That's going to happen. But look at this crazy price action. So look at what's going on here right now. Do you guys see how flat the 1 hour 50 simple moving average is? Take a look at it on TradingView. Look at how your trend cloud is totally flat, and it's sort of going from green to red, back and forth like that. A flat, simple moving average, a flat, simple moving average, specifically the 50, when it is flat, it's going to give you very strange price action. It's just something to notice because that's what we like to do. We like to be able to see price action. Whoops. Let me see here. Hold on a second, guys. More. Oh, where is it? There we go. Okay. Alrighty. We like to be able to see very clearly on our screen, on our charts, price action in a very visual way, right? That's why we've got Trend Cloud on there. It's a very visual expression of price action. And these are all the little things that you learn as you learn to use your Trend Cloud. And a flat, simple moving average is going to give you weird fluctuations in price. And that's what we're seeing right now. So look where we're at. We are in a downtrend, right? We are in a downtrend on the 1 hour. The 4 hour here, the 4 hour and also the 3 hour chart, the CCI is below the zero line. 1 hour is down, right? 1 hour trend is down. And we are just breaking below the zero line now, right? Let's go over here. And now we're breaking through negative 100 here. All right. So this green dotted line that I have here, that's the 3 hour 50 simple moving average right there. It's the 3 hour 50 simple moving average. And there you go, right? So downtrend on the 1 hour chart, that is a trending time frame. That is where we say, okay, we're in a downtrend. Now we need to see all the components working together for a downtrend. All right. And that's what we do. And it works very nicely. It gives you the direction of the edge. Where is my edge? What edge am I going to have? I don't want a 50-50 shot at this. I don't want a 50-50 shot at all of my trades. I want a 60 or 70% shot, Now, in edge in any way, shape, or form can be something very slight, right? It could be something very, very small. But when you compile, a bunch of edges together, it gives you, something that's 60, 70% accurate. And that's what we've got here, right? That's what we've built and back tested and saw. We've got something around 68 to 70% accurate. And if you look at my numbers on Topstep, it reflects that. So that was very interesting to see. It was very interesting to see my, 70% accuracy or win rate with a 70% win rate strategy. And we've seen these numbers, and I've been saying this for years now, right? So what have we got here? We still have an uptrend on the 3 hour and 4 hour chart, but we're not really concerned that much about the trend on the highest time frame. We're concerned about the momentum on the highest time frame. And so we're looking at the 4 hour chart here on Topstep because for some reason, we can't bring up a 3 hour chart, but I'll talk to them about that. 4 hour chart, look at that, right? CCI below negative 100, clearly indicating a strong momentum to the downside. The 1 hour chart is in a downtrend. Even though the moving average, the 50 simple, is flat, we're still in a downtrend. And now we finally, right at 9:30, 9:35, we had this rapid move up. This probably faked out a lot of people. Oh, it's going back up. Well, hang on. We're still in a 1 hour downtrend. The 1 hour downtrend, or the 1 hour trend in general, that is our directional chart. That's our directional time frame. So we must respect it. We must respect your trending time frame, which is the 1 hour chart with what we do. So that's what's up. Okay. So momentum, high time frame, down, very strong to the downside. Trend, 1 hour time frame, down. And now we have CCI breaking below negative 100. So we have all systems go to the downside. All right. And here we have the opening range forming. Opening range is forming. This is yesterday's opening range right here. And here's the supply zone up here. Okay, that is holding. Let me show you that supply zone. It's right here. On the 5 minute chart, this is a drop-based drop on the 5 minute chart. Okay, and I have boxed it out here. Let's take a look at it. So you see it. There you go. Drop, base, drop. All right. And price came right up, just tapped it, and made the move down. All through the night, look what was going on, all pre-market. Look at this beautiful 5 minute trend to the upside. Look at this. Pulls back into trend, correction into trend cloud, impulse up, correction into trend cloud, impulse up, boom, 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 boom. All the way, all the way, all the way, right to that supply zone, boom, breakdown. Interesting, right? Back to the 15, even on the 15 minute, right? Correction into trend cloud, impulse up. Correction into trend cloud, impulse up. Same, whole way, right? 5 minute supply zone. There you go. Right here, right about here is yesterday's ADR. This is yesterday's ADR checkpoint right in the middle of this demand zone here. Okay, we do have a rally base rally right here that I'm just noticing. This rally base rally, but it's not fresh, right? Rally base rally on the 15 minute chart, pulls back. Why don't we elevate this to there? And let's just box this out for now. Okay, let's box that out for now. We can do that. We can take the full, right? The full box. That looks like quite the picture there, doesn't it? And then from here to here, we'll box that out, here to here. Okay, that's the end, the market edge. That's the market edge right there. Okay, so we could see. So what is going on here? Well, we're in between, right? We're in between, and this sort of consolidation here, this consolidation is a reaction from that very flat 50 simple moving average on the 1 hour chart. So let that be a lesson that you mark down, write it in your notebook. Always have a notebook, write stuff down, journal, write your affirmations. Yesterday, I wrote over and over again at the coffee shop, do not trade outside of your strategy. And I was like Bart Simpson and just wrote it over and over again on a couple of pages there, because that's what I had to do for myself, for my brain. That's what I had to do. And these are the crazy things that you've got to do, if you want to rely on this. Sarah, you just got funded. My goodness. Talk about responsibility, right? Now it's like, okay, it's game time now, like if you want to copy trade this, across, 10 accounts eventually, every month you add an account. I think that's pretty wise. I think that's a safe way to do it. It's a huge responsibility now. It's like, okay, what am I going to do? Am I going to go haywire and start, trading a whole bunch of stuff that I don't have any data on? Or am I going to trade what I know is working? And that's something you got to go through that yourself, and you got to go through that in your head. And that's what I'm doing. That is what I am doing for me, because I am preparing to pass this combine. And then in August, and you have to write that down, write it down in a notebook. I will pass the combine in 30 days. And on August 1st, I will open up the new combine and I will copy trade my funded account onto the new combine. And then in September, open up the next account and copy trade both of those. And that's what you have to write out, on lunchtime when you're by yourself and or sitting in the cubicle or whatever. So many things. My goodness, I wrote so many things on paper napkins after lunch sitting in my cubicle. Oh Lord, the cubicle. I don't ever want to go back. Don't want to go back to the cubicle. So that's why this stuff is so important. Do you want to focus your time and effort and energy on writing this stuff out, like those affirmations, and getting really good at your day trading and working a system and a back tested strategy? Do you want to get good at that? Then you've got to throw yourself completely into it. And there is nothing else. There is nothing else. There's only this. And this is what, we're going to do. That's the plan I have for me. And I'm doing it. And I've been doing it for the past 3 years pretty consistently. But this whole thing with the prop firms has been a game changer. This has been a real game changer. To be able to copy trade everything that you do across 10 accounts, holy cow, that that is everything. So I think the little process that we've put together here, the developmental process that we've put together here at TrendCloud has been so successful. It's like, number one, learn the basics, right? Learn the basics. Number two, practice in the simulator. Practice those basic trainings in the simulator. And then step three is go into competition. And we like to use the LEAP, day trading competition, right? We learned a lot about ourselves in those competitions, how to follow rules, how to make decisions under pressure, all in the and it's simulated. You're not losing any money. So you've got 3 stages so far, all in the simulator, right? When you can finalize in the top 10%, top 8%, top 7%, right? Last competition finalized in the top 7%. I did, right? When I say we're experiencing all of this together. But I finalized in the top 7%. The fourth phase is that small account challenge, right? Holy cow. Hold on, guys. This thing is really, let's look at the full charts here. 945, downtrend, very strong. And we have already broken out to the downside. Okay, so let's get rid of that. Let's put our lines right here and right here. Here's today's opening range, guys. Today's opening range. Ripping to the downside. Ripping to the downside right here. Big time. Now, very cautious on going short on the Nasdaq, right? Very cautious going short on the Nasdaq. These shorts don't tend to be as as long, right? It could be very short-lived, and we are inside of that demand zone. Now, this demand zone that we're in is not fresh, right? This is not a fresh demand zone that we're in here. So open up the chart. Did we draw that out on the 1 hour? 15 minute, sorry. Okay. So rally-based rally, not a fresh zone, right? And here is the opening range. So we would be going short right into demand. We're going short right inside of a demand zone that's not fresh, right? So maybe it does want to break down to here. Maybe it does want to break down to here. And this is yesterday's ADR. Let's see, where is today's ADR? Here. Right about there. 23052. There's the ADR. All right, let's get rid of this thing. 23. Put a line. Looks like our ADR. Okay. So there's the ADR low. Actually, that should be a red line. Let's make it red. First ADR checkpoint right there. All conditions are set, right? All conditions are go. Well, all conditions are met for that breakout to the downside. And it did. And we broke out to the downside right inside of demand zone. Okay. And here we are. Get rid of that line. That is yesterday's opening range. All right. And we're kind of sensitive to going short on the NASDAQ, right? Especially when you're breaking to the downside right into a demand zone. All right. So let's see if this demand zone holds and we don't go to this or hit that ADR to the downside. So anyway, fourth stage, right? I was talking about the stages that we developed here. Number one, basic training. Number two, practice in the simulator. Number three, get involved with a day trading competition. We use the leap. Number four, right? Also in the simulator. Number four, the small account challenge. Take $500 and see how long does it take you to make $5,000. Go from 500 to 5,000. How many times did you blow out the account? Right? Like, how many times did you blow out the account? Then, if you can do that, now do it live. Now you do that live, and you're probably going to blow that live account out a couple of times as well. But you've got to feel it. You've got to feel that. So the small account challenge is like part A, you do it live. I mean, part A, you do it in the simulator. Part B, you do it live. You've got to get from 500 to 5,000 in the simulator, then do it live. And I'm telling you, you're probably going to blow out that account. So it's a little bit of an expense, but that's going to make you feel it. Okay. And then finally, the fifth stage, once you've completed stage four, where you go from, or phase four, where you go from 500 to 5,000 in the live account, stage five, that's when you trade live, that's when you trade live. That's when you're ready. I don't know how long it's going to take you to complete all of that, but it's not going to happen in a couple of months. And I think that's what beginners tend to have a misconception about. People who don't know how to who don't know how to trade yet, they're like, "Oh, can I learn this in like 2 or 3 months?" And the answer is probably not. I mean, maybe, I don't know, maybe if you're a genius, this stuff takes years, right? But you can definitely get through those 5 stages within the year, I would say. Give yourself a year at least, but to really have a deep understanding of anything. Why do you have to rush becoming a day trader? Do you know how long it takes to become a mechanical engineer or a software engineer or anything, any professional position? How long does it take you? How long does it take you to do that? You can be successful with it in a shorter period of time if you have a great if you have a great mentor. That's right, Sarah. If you have Trend Cloud, then you can do it 2 or 3 months, like no problem. And all you need is $100. And $100, gonna make a million, right? Oh my God, that's funny. Yeah. Yep. So, this is the story, right? But look at how that's awesome, Sarah. That's awesome. But look at how great we're reading price action here, right? It's like, okay, we've got a downtrend. Yes, we've got momentum very strong on the highest time frame as well as the middle time frame. But oh, look at this. The opening range has formed right inside of a demand zone. So we're basically going to break to the downside right into demand. And you have to have enough experience to be able to draw this stuff out and see it kind of quickly, right? And that's what you get. You get faster at this. But these are all the things that you really need to put together and say, okay, I'm not going to go against what I already know. And I think what we all do, I've been doing it. In fact, I'm so glad I'm documenting and recording all of this because it helps me as well. It helps me develop as a professional day trader. And I'm realizing now that there's a big difference between guessing and seeing, right? We can see on the chart, we can see this demand zone. We can see the downtrend. We can see momentum. We can see price action, right? We're seeing that. We can trade that. We can trade what we see. Guessing, on the other hand, Guessing is like, okay, which demand zone is this thing going to pull back to? I don't know. You're not going to know. So I don't think you want to rely heavily on that. You want to rely on a system that gives you some components, that gives you some structure, and then you trade off of what you see. But whenever I try to play the guessing game on which supply or demand zone is going to work, it ends up going a little wonky for me. Okay, so I'm just putting that out there. And that's why I really like this opening range strategy that we developed. We all developed it, we all of us in this group here, because though there are some variables there that are fixated, the where and the when, right? Where do you take the trade? Oh, well, we're going to take the trade as it breaks to the downside right here. Well, when do you do that? Oh, well, 9:45. 9:45, that's when the opening range forms. And we take the trade right here. But we only take the trade when we have these conditions met. Okay. And we do, right? So legitimately, we can be taking this trade right now, but we're taking it right into demand, right? We're taking it right into demand. And so you have to decide whether or not you want to do that. And then we've come up with, all these caveats, right? All these bonus components. If you're in a downtrend, you want the opening range to be formed with a bearish candle. Ooh, look at that. We have it. Another bonus component is when you've got the 5-minute candle, which it looks like we're starting to get that now. The 5-minute candle must break out and close below the opening range. That is another component, bonus component, right? We've got 3 minutes left. Let's see what happens here. And also, did you see from early on? I think it started around 9 o'clock this morning, my time. The rapid price action movement to the upside. And when did that happen? Let's see, what time does that show the time? 9 a.m. I put that post out. Look at how the 1 hour SMA, look how flat the 1 hour SMA is, and price is now bouncing rapidly, right? So yeah, still not closing, right? 2 minutes left, and yeah, I'm pretty cautious about going short on the Nasdaq. Being that the way things are, I think a lot of people are going to be looking to buy the dip on this. But if you look at the strategy in the strategy tester, when you actually put the trend cloud opening range strategy on your chart, on the 15-minute chart, you see that what was I going to say? It's around 68 to 70% accurate. But you can see that it takes longs and shorts, right? And so when you look at the buy and hold line, which is the blue line, if you look at the buy and hold line, you see these massive gaps between your opening range strategy and the buy and hold. And that's where you make up a lot of your profits there, rather than buy and hold is just going long, right? It's just up. So all the major corrections, strategy eliminates that. But as of right now, okay, so there's the close, right? So we should get some sort of move to the downside, but again, shorting right into a demand zone, that's a rough one for me. Goodness. So let's see what happens here. Breaking through. Okay, so we're breaking through this demand zone here on the 5-minute chart. We have okay, there we go. Breaking through this thing, going back to here, and here's ADR, right? So, oh my goodness, I mean, I've been taking so many longs. I'm not used to taking an actual short here on the NASDAQ. I'd be more interested in having this rip through these demand zones, hit this ADR, and then start making, some rapid move back to the upside. Look at this on the 5-minute drop, base drop, drop, base drop. All right, so as this pulls back, and right here, rally base drop. Look at this rally base drop right here on the 5-minute. Okay, so here's a little bit more of a bird's eye view of what's going on here. But again, look, all conditions met with bonus conditions to the downside, right? All conditions met to the downside, and it is working out so far. But that's kind of scary, man. And again, shorting right into demand, it's probably not the best situation to be in. Not spectacular. Anything less than spectacular, you've really got to, you've got to be cautious. You have to be willing to take a risk. What are you willing to take a risk on? The market can do whatever it wants, whenever it wants. So why not filter those trades and just take trades with spectacular premium setups? I remember one of my favorite movies is Rounders. It was about these card players, right? Ed Norton and oh God, what's the other guy's name? Jason Bourne, Matt Damon. Couldn't think of his name. Matt Damon and Edward Norton, and the movie was called Rounders. And they were card players, they were poker players, and he said you only play premium hands, and then you start to read the people. Right. You got to read people. That's what poker really is. It's a skill game. It's about reading people. But you only play premium hands, he said. And that's what you've got to do with trading. You have to read the price action, try to get a feel for, what personality, is this outside of the personality of the NASDAQ that we usually see? And then you have to play premium setups, do you really want to short into demand? It might work, but the market can do anything it wants. So why not, if the market can do whatever it wants, why not just save your energy for premium quality setups? That could really be the difference between consistency and inconsistency. I was listening to Topstep TV, and one of the guys they were interviewing, he was saying, yeah, I make 200, 300 here and there, but then I lose 200 and 300. And if you really think about that, what's going on with the day trader that makes $100, but then loses $100, makes 200, loses 200? I really thought about that, deeply. And I said, this sounds like a targeting issue. This sounds like a targeting issue. He's cutting the losses too short. What are the targets? And I don't know if he was doing 1-to-1, 2-to-1. But I think if you live your life around constantly taking 2-to-1 all the time, I think you're going to go through, or 1-to-1 all the time, and you're not scaling out of the position. I think that could be the issue, right? And nobody knows ADR. No one at Topstep knows. In fact, you can't even pull up an ADR on your Topstep chart. I don't think they use it. You can't use it on their platform. But, so we've got something pretty significant. I mentioned it in a chat or something. Nobody responded. Everybody was like, ADR, what's this guy talking about? Oh, it's only the most amazing targeting system that you can have on your chart. That's all it is. So yeah, if you're just taking short targets like that, and I make 200 and then I lose 300, or I make 100 and I lose 150, and back and forth, back and forth. What is that? You've got to start to study real problems that every day trader, eventually goes through. And if you don't think deeply through it, it's going to consume you. You have to understand your profession. You've got to understand the problems. Like engineers, when you get a bunch of engineers together, they all talk about what happens in the factory and the bottlenecks. And because when I was a recruiter, I would listen to these problems and I was like, wow, these guys, they really think very deeply about issues that go on in their world. I think that's wonderful. I think that is just the engineer mindset, which is fantastic, So you got to do the same thing. You've got to do the same thing here. So we're breaking through. You can see we're breaking through that first base rally and heading back down to this market edge here. I think I originally had this drawn out kind of like this. And it's okay. You can do stuff like this, you know. Maybe that's a little more clear, you know. It encompasses all of this, right? Boom, 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 coming back down in here. Do you see how maybe when you first started trading, it's like, oh, demand zone, take it. Whoa, you know? Yeah, we want that to work. We want that to work, but we've got all these other little moving pieces like trend and momentum, especially those two. You got those two pieces working against you, which is why, you know, we don't just take demand zones out of nowhere, you know. So I've got a minute left on this recording here for Zoom, but I think that was a good I think that was a good lesson. And I'm going to watch this and manage it for the rest of the time, you know, right up until, you know, 10:30, 11 o'clock, and just watch. I'm going to observe, okay, how did momentum and trend react today off the opening range? And so far, what we have, our components all have been met. Even the bonus components have been met, and it is working out, breaking out to the downside, making a move to the downside. But again, in the NASDAQ, like we really want to focus on longs, right? Because the long trade, that's a trade that's it's gonna last and it's